Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Golar LNG, ticker GLNG, giving sort of an overview of the company. I've been looking at this company recently, wanted to share what I've learned and give you, kind of an overview of another company in the LNG space. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do not currently hold any position in this company in Golar LNG, but there is a reasonable chance that I might purchase some shares in the near future, just in the interest of full disclosure. So this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So, Golar LNG. This was originally brought to my attention by someone, I don't know if he wants to be named or not, so I won't, in the Tellurian Discord, who mentioned, who pasted some excerpts from the earnings transcript, the Q2 earnings transcript, which was released in, this is a call from August of this year, right? So last month, I think. And he had this excerpt, which piqued my interest. This is an excerpt from the CEO, I believe, speaking, saying that we expect EBITDA generation from our existing FLNG portfolio to quadruple from 2021 levels into 2024. This could meaningfully increase further once additional FLNG growth projects are announced. And we now have cash and debt capacity to facilitate FLNG growth from internal resources, which will be the key focus for the next phase of the company. So this sounds, fantastic, right? Like this sounds, everything's firing. They're going to quadruple their EBITDA, in 3 years, and then they have even more growth projects that they are planning to do and that they are able to fund with their own resources. So I had to look into this, and it was a little strange because I feel like I'd looked at this company a couple of years ago when I started learning about the LNG space, circa 2018 or so. When I initially invested in Tellurian. And at the time, I believe they were mostly a LNG shipping company. And that was not nearly as interesting to me. It seemed like, a solid, boring business, but a lot of the stuff that, I was looking to invest in and still am to some degree are, more higher growth businesses that have, a little higher risk, a little higher reward is, sort of my, a lot of what I like to invest in. And that was so I had never really looked back at the company, but when I read that, it didn't really jive with my prior understanding. So I went to to investigate, and they did have a recent investor presentation that really was interesting. And I've read more in the reports down in the SEC filings, but this is a nice visual to show you what they have done as a company. That this is that I think my inclination was correct. That is the company they used to be, and now they are very much focused on, the liquefaction, right? So in the last 12 to 18 months, they have sold almost all of their LNG carriers. And I think there's like the one that they haven't is this Golar, that might be too small for you to see, but this one on the bottom left is Golar Gandria, as it's called, that they basically have set aside in order to convert into a floating LNG, floating liquefaction carrier. And they sold all of their LNG carriers. Except for that one, they sold all of their, FSRUs, and they sold some of these other operations that they apparently had that I wasn't even didn't really know that much about. But they are focused on they're focused on these FLNGs, right? And these are basically ships that are liquefaction units, right? LNG. Instead of having like, for example, a lot of folks who watch my channel are familiar with Tellurian, and they're hoping to build driftwood, right? And that's a liquefaction facility that is on land. They are doing this on the ships, right? The ships that I think I'm not sure if all of these have been conversions or if any of these were new builds, but I think a lot of these are LNG carriers that they have actually then retrofitted to converted into these liquefaction units. Hi, Transient Stacker. Transient Stacker says, I bought some at $22, but sold it for a small profit. I wish I would have held it. Yeah, and I think it's, current price is not that far off of $22. So it still could get big, could get back in. I mean, to be honest, I haven't made up my mind if I'm going to buy some or not. But it is, as I'm learning more about the company, I'm forming more of an opinion. I do think I'll probably at least open a small position with the company, because it's interesting, right? And the future growth, I think it has a really good option for for future growth. But let me get into that. All right, so that's sort of why I got interested in the company, and now the company's focus is just on liquefaction ships, and I think it's super interesting. And so if we look at what they do have right now, they have this overview of their current ships, right? They have this, and I'm probably going to butcher the names. I actually listened to their earnings call, and the pronunciation is a little weird, but it's the Hilly, that is actually in operation, is liquefying gas right now and producing EBITDA. And then there's the Gimme, which is it's currently undergoing the conversion to become an FLNG ship, and that is expected to go into operations in the second half of next year. And I'll go through just a little bit of the numbers with that in a bit. But then they also have these their own designs, this MK1, MK2, and MK3, which are sort of different sizes of FLNG conversions they can do, probably even new builds, I suppose. And they do have, as I mentioned, this other LNG carrier that they own but is not in operation right now, that is sort of set aside and earmarked for conversion into an FLNG unit. All right, Transient Stacker. I see another message. Transient Stacker says there's a lot of ups and downs in natural gas and LNG. I bought some EQT as well, but sold it also for a small profit. They both popped later. Yeah, absolutely, lots of ups and downs. And I mean, I don't think that's over. I think especially in the current geopolitical environment, things are they're very they're hanging by a thread, right? Where I think the balance of natural gas is it's tightly wound, I guess I would say. Yeah. So going on with some stuff I want to talk about. So that's sort of the projects they have right now. They also, and this will get me into sort of talking about their balance sheet. They own portions of other companies, right? And so this Coolco, let me go through this one first. This Coolco, I believe, is actually, when they say they sold all of these LNG carriers, I think a lot of those actually got put into this other company that they mostly sold off, but they still own some of it, right? So this is still operating, an LNG shipping business, if I understand correctly. And so they just hold this, and that is one thing that they own that is worth apparently $135 million is what they estimate the value is. I do not believe that this is publicly traded. Correct me if I'm wrong, but I don't think this one's publicly traded, so we kind of just have to take their word for it. I just put that as sort of an item as an asset on their balance sheet when I'm looking at the valuation, but that is something to be aware of. And then they also own a little bit in this Avenir LNG. I didn't even go into too much detail. They only estimate at $45 million their stake is worth, so I don't worry too much about that. However, they do own a good chunk, 12.4 million shares, if I recall the figure correctly, of New Fortress Energy, which is a publicly traded company, and actually does pay out a very modest dividend here to the company. And I thought that was interesting, right? That they hold this. They actually sold like a third of their stake earlier this year to raise some cash, but they're holding the rest of this for right now, and so they hold quite a large chunk here, right? I think this rate as of right now would come up to, well, let's do the math. We can do the math real quick. 12. I think it's 12.4 million shares times 44.63 is over $500 million, right? $550 million, and so that's another asset that they have when I'm valuing the company that I'm looking at. So that's kind of some of their assets. They also have. Let me just bring it up. I think I have their balance. There you go, balance sheet right here. They also have at the end of June $500 million in cash, and then in terms of liabilities, I think the total liabilities come out to about $1 billion worth of debt. They have $1 billion. Actually, I guess it's 1.4. $1 billion of non-current debt, and then 366 million of current debt, right? And so I did the math, and where are my notes? And looked at all of that, and that comes out to, oh, where is it? I'm sorry, take me a bit to $1.38 billion in debt. But if if we take their market cap, add on the debt, subtract out the cash, we go from a market cap of about 2.666 billion. And actually, I did this math yesterday when I was putting together my notes. Let me redo the math right now. So 2.666 billion plus the 1.38 billion dollars in debt minus the 0.529 million in cash gets us to a total enterprise value of 3.5 billion dollars. When you look at it that way. However, if you then want to subtract off the $553 million worth of the New Fortress Energy stock, and then if you take their word for the others, the $135 million stake in Coolco and the $45 million in Avenir, that gets you to an enterprise value that's actually pretty close to their market cap, right? Meaning that their assets and their liabilities, their debt right now kind of cancels itself out. Pretty close at least. And so we are looking at an enterprise value of about 2.8 billion dollars, somewhere in that vicinity. So and that also just lets you know that yes, they have some debt, but they also have a good chunk of assets to cancel it out. Their balance sheet, I think, is okay. It's not exceptional, but it's fine for an operating company. And one of the takeaways there is that they do have actually a good chunk of, they weren't lying when they said they have a good chunk of cash and some assets they can actually leverage in order to fund some of these, future growth projects, which I'll talk about in just a moment. There's not a lot, but there is a bit to talk about there. I did also look at, and I think the best source for this, there's a lot going on with this company in terms of if you want to read through their quarterly report, like there's just so much detail in here, and I tried to read through, at least skim through as much as I could, but they've done so many disposals of old business units. I think a lot of this will actually get cleaned up in the future. But as I mentioned before, the primary operations that they have, they got rid of everything. They're focusing on these FLNG units, and really they only have one operating right now. They have this Hilli that is operating, and they own, I think, a majority of that, but I don't think they own the whole thing. They sold part of the equity interests in this, at some point along the way. But I did dig up some numbers from this presentation. You can grab it yourself if you want and try to, create your own calculations, because it's fairly complex. Again, there's a lot going on here, and they've actually contracted out the volumes here in different portions, indexed to different commodity indexes. But they have, I think, fully hedged there for 2023 and 2024. I guess they did 50% hedging in 2024 for the TTF link portion of this, and that actually, they hedged this at about $50 per MMBTU, which are, historic highs. And so they were able to sort of lock in some pretty good cash flows or EBITDA really for the future. And I put this just in a quick spreadsheet. Let me make this a little bit bigger so that you can hopefully see it. Not a whole lot of detail here because this is just a simplified model. This is just an overview. But I think in the rest of 2022, right, the second half here, we can expect about this. This is an estimated figure because they did not actually hedge this, and so we don't know. We don't know exactly what their revenue is going to be in H2 of this year, because I don't think they hedged like they did for 2023 or 2024. But going off of some of the estimated numbers that they have, I believe we're going to see about $110 million of adjusted EBITDA from the Hilli, and then going forward, you'll see about 150 in 2023 and 294 in 2024, right? And half of that, half of the TTF link portion there, which actually is a large chunk of that, is hedged. Another thing to note is that the amount of LNG that they're producing in 2023 is actually going to increase. There was this sort of 0.2 MTPA option that folks, the folks who are sort of directing the operations or consuming the gas, I guess, they exercise that option, so they're actually going to increase their production in the beginning of 2023 from 1.2 to 1.4 million tons per year. And it is a bit of a shame because I think, if I read correctly, the capacity, the liquefaction capacity for that ship, for the Hilly, is 2.4 million tons per year, even though they're only actually operating at 1.4. So that is, maybe something will happen in the future and they'll actually expand the operations there and just produce more LNG from that additional ship, and make more money with basically just not a whole lot of additional, and no additional investment, I would assume, and not a whole lot of additional costs other than just the variable cost for that. But so that's the state of their ship that is in operation right now. Then they also have the Gimme, and this one already has a contract, I believe, with BP for 20 years. So they have somebody taking that money. I didn't extend this model past 2024 because we really just don't have that much visibility in gas prices in the Hilly, even though we probably could model out. But I think 2024 is a reasonable model for what it will look like going forward. So if you look at the Gimme here, it is not in operation this year. It will be in operation next year. I guess I should have put in a number here for debt. There is some debt that they have drawn down. I don't exactly know what that is. I think it would probably be reasonable to say that they have already drawn down, I think, was it $500 million, and they're paying LIBOR plus 3%. So if I do, let's see, LIBOR is about 3%. Let's actually, let's put in 30. Let's assume they're paying $30 million in the debt from the facility that they've already drawn down this year. So I have this line for their debt that is tied to the Gimme, and then I also have this line for the actual EBITDA for the Gimme. And again, I think they're going to operate for half of 2023 and then operate for all of 2024 and going forward. And they have this, I believe, fairly well spelled out in their contracts, right, that the Gimme is going to have EBITDA of 151 every year going forward per the contracts. So this is commencing Q4 2023. So I guess maybe my numbers are slightly off here. Maybe I should put this down to 37.5. My apologies for not noticing that already, but that's the EBITDA that we can expect to see from this going forward. And so if we move on down, I think their administrative expense, I just model this as increasing a little bit, 10% a year for the next couple of years, and that probably is conservative, right? Hopefully they don't actually increase that much, but it's kind of hard. We don't have visibility in that because of all the changes they've been making to the company. We'll just have to see. We'll have to see what this looks like. I did put in here it's a small line item, but it is significant for the millions of dollars per year that they get in dividends from the New Fortress Energy stock that they hold. And then I also have a line item here for all the cash they're gonna have to pay for the actual remaining costs on the conversion of the Gimme to turn it into an actual FLNG unit. And then they also tacked on this incentive payment for the shipyard to actually get this thing totally done and ready to go in the second half of 2023, and that's an extra $50 million. So add all that up, and when we look at the actual, but I sort of made up my own metric here, but I'm calling this adjusted earnings, right? And this is sort of like the EBITDA, but then also subtracting off the debt, right? Because debt is a very real expense. You can't get around that. So if we look at this here, I think they're going to be, negative for the remainder of this year, largely because of the actual cost that they're paying to do the Gimme conversion, and then they're going to be largely negative again next year for basically the same reason. The year after that, they're actually positive. And then here I could actually let me copy paste this for 2025. This is just an estimated model. I didn't look up the gas prices. Let's assume gas prices are slightly lower. Actually, I don't even think that's a fair estimate. Gas prices, I think things are still going to be tight in Europe. Let's just keep it the same for illustrative purposes. Again, it would be a big caveat that probably should do better and look up the forward prices at the moment, but I'm not going to do it right now. But if we look at that, and then if we take off this Gimme conversion payment, because I think they are done paying for that in 2024, they have this listed out in the annual report. I'm not going to look it up at this very second, but I believe they're done in 2025, and so this would give you an indication of what is their profitability going to look like once they're done with that. How much cash are they going to be bringing in? And now it starts to look pretty interesting, right? $250 million per year, right? So 2024, 133 sort of $1 million I think they're going to have in rough earnings. And And again, I'm not worried about depreciation, amortization, even though those actually would subtract off here and even reduce the taxes they're gonna have to pay. But they're gonna have to pay taxes on these earnings before they could before they have actual earnings to speak of. But if you look at these numbers, this is kind of what I'm looking at. And I think this is probably a reasonable model going forward for their profitability. And so let's call it 2025 and ongoing, just with these two ships, $250 million per year in sort of EBITDA, but then subtracting off the debt payments. So that's how I'm looking at the company. And so then if you go back and really ask yourself the cumulative payments, and sorry, I should also mention the contract for the Gimme, the operations here, that's a 20-year contract. The Hilly is only contracted, I think, through maybe the middle of 2026. So that is a material risk, right? That this income could go away. We don't actually know what they're going to do for following up on that contract, but presumably they're going to find somebody else here. Transient Stacker says, the reason I sold was because I wasn't sure if they had already reached their high and wouldn't go up much higher. How high could they go? So that's an excellent question. And that actually gets me to the very last topic here, which is, they basically have this additional ship, the Gandria. Where was it at? They have it listed here where they've done everything but say that they're going to go ahead and convert it. They talked about this on the earnings transcript, and I think they even in their, let me see. I don't recall if it's in this one in the quarterly or if it's in the yeah. So we've agreed contract terms for the conversion of the Gandria to a FLNG. It's in layup awaiting delivery to shipyard for conversion, right? And so this is their other ship that they own. Let me just open up the annual report because that's where I was thinking they had this detail here. And so they literally say that they have this earmarked for conversion, right? And this is the other ship, and they own this one 100%. They don't own 100% of the Healy, and they don't own 100% of the Gimme, of those other two ships that they have. But they do own this one 100%, and they're ready to convert this one, right? And they talked about in their earnings transcript that they basically said, not that. Where's the other one? They want to convert it. They want it to be capable of. That's not. Basically, they talked about they can convert into either this. They have multiple designs, but they have this Mark 1, which is the smallest, and Mark 2, which is sort of the medium-sized FLNG unit. And they basically got everything lined up and say, look, if we can make the agreements, make the deals, we can start building this thing and actually have it in operations in 2025. They said we are happy to announce that we can deliver FLNGs during 2025 if we commit to a project during the second half of this year. And then later on in this call somewhere, they basically said, we intend to do that in the second half of this year. And that's what their comments were up above of well, we also have cash and debt capacity to facilitate the FLNG growth from internal resources, right? They already have the cash. And so I don't think that they are really constrained on getting all the deals in place. I think they just kind of have to line things up and say, all right, we're good. And I think you saw part of that, and that's part of why I think you saw them, hedging the 2023 and 2024 incomes from their existing operations, because now they have predictable cash flows from those. So it doesn't matter if LNG prices, plummet for one reason or another, in 2023 or in 2024. They have a lot of predictability there, and I think they're going to go forward with this, right? And so the implication here is, let's just not make up some numbers, but try to model it out real quick. Let's say, this is ship 3, Gandria. That's one more row. Gandria. EBITDA. And then let's not talk about debt, right? Let's assume that they actually fund this off of the balance sheet, largely. Maybe that's a bad assumption, but let's assume they have similar debt, right? That they let's look at this here as the gimme. And I don't know that that's actually reasonable. There's so many ways that they could do it, but let's say that they get to that point, and so this starts operation in 2025, and let's even just ignore it till 2025 and start looking at 2026 and sort of build a model year here and see what this looks like. I'll sort of state my assumptions in real time. Let's assume that nothing changes with the Healy or the Gimme, and then they have this ship, which is going to be basically the same as the Gimme, but a larger ownership stake right here. And I think as I went here for the Gimme, they own 70%. Let's say for this one, they end up at they own 100% of it, and the Gimme is 2.5 MTPA. Let's just assume they make them another ship. I think it was the Mark II, which is up to 2.7 MTPA. That's close enough to 2.5. So let's just say that the numbers are the same, except 100% ownership and not 70%, right? So we're looking at F7 divided by 0.7. Let's round these numbers off. There you go. And so then we add this up in terms of what does this look like. I'm keeping their administrative expenses the same, which you can quibble whether you think that's reasonable or not. And so by 2026, they could actually be looking at $330 million of effectively earnings, right? Take out some taxes if they really want to, but I mean they could pay that out as a dividend. And what would that look like? Right now they have 108 million shares or so outstanding, right? So $327 million of cash that I think they could distribute divided by 108 million shares. And they could be paying, let's say they pay out 50% of that, of what they could pay out as a dividend. Again, this is totally hypothetical. You could buy the stock now and get $1.50 per year dividend, right? And so that would be starting in 2026, the 6% dividend rate in 2026, buying now. Like that's kind of what I view it as. And again, there's partly they are going to do very well, better than what I'm modeling here probably if LNG prices stay elevated, right? Because I think the thing that's actually unrealistic about what I just modeled out here is that I'm looking at profits for the Gandria based off of the contracts that they have for the Gimme, and that has no upside in it, no commodity risk, right? And this is part of the large, in my opinion, part of the big profit potential for Tellurian was they had those sales and purchase agreements that are indexed to TTF and JKM, and that the commodities at those places, right, the gas there has a potential to be very high, right, as we've seen right now. And I think that's why we see that the EBITDA on the Healy is so high for 2024, is because they locked in those LNG prices, right? So they locked in some of it, and they're even have some of it is floating, and they're saying, hey, we'll take it. If gas prices go up even more, we'll take the higher gas prices. And if they finance this themselves, the Gandria, they're going to sign contracts or even just sell it spot, right? Sell spot cargo, sell it at the time, at whatever the price is, and really capture that value. So this EBITDA could be a lot higher than what I'm modeling here. So that's sort of the upside where they would be able to capture that upside, I think, if LNG prices stay elevated. Hopefully that helps give you sort of some of my thinking, at least. And again, give all the normal caveats. I'm not an expert, not a financial advisor, just kind of that's kind of how I understand things. So hopefully that gives you some idea. And again, I think there is upside here. I don't think Golar LNG is also not a startup by any means, right? So you don't have the same massive profit potential from the current place that I think you do have with Tellurian, right? And that's why I have I have a large position in Tellurian, as I've mentioned, large for me, as I've mentioned multiple times, because they are still sort of at the beginning of their journey, and if they actually get to the point of building driftwood and having favorable sales and purchase agreements, like the profit potential could be very, very large comparatively to where they're valued. So yes, and sorry, I only skim your last message where you said, I was concentrating on tellurium because I expect a big jump in stock price. Absolutely. And I think that's true, right? I think Golar, I think you might see a couple, spikes upwards. If they announce whatever they're going to do with the Gandria, and when they get the Gimme in actually in production, or sorry, in operation and producing LNG. But a lot of that, I think, is a good chunk of that is already priced in at this point. I think if they start announcing future projects, you're going to see things continue going. And I would say maybe, a good parallel might be, what you saw with Cheniere in, 2019 or so, right? Where, come on, Yahoo Finance. All right, there we go. You look at the chart here and you say, well, yeah, Cheniere here, you could have bought it. And of course we had, COVID, but like they were steadily growing. You look at this chart and yeah, you had a whole lot up here and, but they continued to expand and expand and expand. And then they finally captured some of your tailwinds from the commodity pricing itself. But I think it's probably a closer model to compare Golar to Cheniere, as a, Cheniere in, 2017, 2018, rather than to Tellurian, right? Because Golar is not a startup. They do have some operations and they're giving a fair bit of visibility into their upcoming growth as well. And, it's pretty credible that they're going to actually achieve that growth because they already have a lot of cash. They already have the assets to do this themselves. So hopefully that, helps. All right. That was, I think everything I had to go through today. Hopefully, both for you, Transient Stacker, and anybody, watching Sept, hopefully that gives you some, insight into Golar LNG as a company. If you have any additional questions, Transient Stacker, I'd be happy to, chat for a couple more minutes. Otherwise, I'm going to hop off. I'm at the end of my material. For anybody else who happens to be watching this after the fact, I do these videos as many days as I can fit in the evening, Eastern U.S. time, 9, 10, 11 p.m., somewhere in that vicinity. And I do, try to read all my comments that I get on the videos. So, feel free to drop, leave a comment and, open up some conversation with me. All right. I guess that is it. I don't see anything else on the chat. Thank you, Transient Stacker, for hopping on the stream today. Great comments and questions. I appreciate it very much. And have a good one. Take care.